Good morning, everyone. Welcome to this webinar brought to you by European Issuers with the sponsorship of Euronext. European Issuers is a European association based in Brussels and bringing together companies and also trade associations from around 15 member states. And Euronext, where do I have to introduce these guys? They run trading venues and stock exchanges in different countries in the EU. My name is Lequan Tranvan. I work for AFEP, the French Association of Large Companies. AFEP is a member of European Issuers, and I have the chance to be the co-chair of the corporate reporting working group. Today, we will discuss the role of corporates in sustainable finance, and more generally speaking, we will discuss about sustainable finance. And I have the pleasure to welcome in this session 4 panelists. First of all, we have the pleasure to welcome Charlotte Gare. Charlotte is Deputy Head of Unit in the Economic Financing Department of the French Treasury. She is in charge of sustainable finance and climate risk for financial institutions. And she was the rapporteur of the Cambourg Task Force. Patrick de Cambourg is the chairman of the French Accounting Standard Setter. And he carried out a task force on extra financial reporting last year. Charlotte is also in charge of the discussion of the taxonomy regulation and its consequences. And she began her career in 2017 working for the French competent authority, the Autorité des marchés financiers, the Financial Markets Authority. We also have the pleasure to welcome today Daniele Vitale. Daniele joined Georgeson in 2010 and specializes in corporate governance, ESG, and executive remuneration analysis. Daniele has over 15 years of experience advising institutional investors and corporations on corporate governance, executive compensation, and proxy voting issues. He previously worked as senior researcher at PIRC Limited in London and at Institutional Shareholder Services, ISS, and Deminor in Brussels. And Daniele is Italian and he's fluent in English, Italian, French, and German. We also have on our panel today Fulvio Rossi. And Fulvio has been since 2005 head of sustainability in Terna, a listed company whose main business is the electricity transmission in Italy. He has been in charge of sustainability reporting, policies and plans, and on the relation with sustainability rating agencies. Terna has reached the industry leader position in the SAM Dow Jones Sustainability Assessment 3 times over the last 5 years. And Fulvio was formerly an economist in the research center of Confindustria and the head of human resources in an energy company. Finally, we welcome today Joël Dibeton. Joël is ESG lead and head of analysis for the listing department of Euronext. He's in charge of strategic analysis, research, and the sustainable finance offering for corporates. He has notably led Euronext stakeholders engagement efforts and designed a sustainable finance strategy for the listing business. Joël began his career in 2013 as a cash markets analyst within Euronext Market Services Department. Then he covered electronic trading, project management, and equity capital markets. Well, welcome to all the panelists. And so before we begin our discussion, I would like just to draw your attention on the fact that you can ask questions during the panel. You have at the bottom of your screen on the right an orange button that will allow you to ask questions. And we will address the questions at the end of the discussions. We will have 15 minutes at the end to answer your questions. So first of all, maybe Charlotte, I will leave you the floor.
Hello, thank you, Lekong, for introducing that session. I'm very happy to be here. First, maybe I'm going to ask my poll question, so you can answer that on the webinar tool. So my question is: should the disclosure of taxonomy alignment by corporates include more than 3 KPIs on turnover, capex, and opex? So reply A is yes, considering the diversity of environmental objectives and the types of activities that are concerned by the EU taxonomy. And the reply B is no, this is purely financial information and it should not be an extra administrative burden if there are more than 3 KPIs. So maybe just to kickstart the discussion about that, I'll be quick, but I'd like to raise a few points about the importance of non-financial information by corporates in the development of sustainable finance. In our view, sustainable finance cannot exist if there are not two essential legs that have to be fulfilled, just like a human being has to walk on two legs and sustainable finance has to walk on two other legs. So the first one is extra financial data coming from the real economy, from companies, and that's the very point of revising the non-financial reporting directive in 2021 in the EU, which we will talk about later. And the second leg is having a common language for sustainability and transition that should be aligned on the objective of carbon neutrality by 2050. That is the one of the EU. So these two elements are very key to us and to the French government as a whole, and that is the very heart of the actions we are leading on sustainable finance, and that we have been leading since we first introduced ESG transparency for financial investors, for instance, in 2015. So what I want to say about this, and again, I know we'll have some time to discuss between each other and then to answer questions, but first maybe is to raise the fact that the revision of the NFRD is a priority on our end, and that was the very core, actually, of the report that we handed out with Patrick de Cambourg, which you talked about, Le Quang, in 2019, and that is the very objective also of the EFRAG task force. So in our view, the revision of the NFRD should at least identify a common but limited set of indicators allowing for data reliability and comparability across companies. And so in order to allow for level playing field in the EU, the NFRD requirement should also apply to non-EU companies operating the single market. And that's how, in our view, will reach sufficient extra-financial data for financial market participants in the EU to actually reorient capital flows toward the low-carbon transition. We also think that combined to the standardization allowed by the revision of the NFRD, there should be an open access database at the EU level. And such database should, in our view, gather all ESG data that is already reported by EU companies, and this since the NFRD of 2014, but also more broadly when available to have the largest possible coverage. And controlling data dissemination in the EU would be an advantage to generalize a standardization fitting the European view of an ambition for ESG, which is at the very core of the European Commission Action Plan for Sustainable Finance. And we think that such revision of the NFRD, such standardization of ESG data, and the creation of that open access database at the EU level would be key to ensure sufficient info and quality and comparability in information that is actually published by companies. And then on the second leg, which is the EU taxonomy, it's a regulation which we think is paramount in the EU and should be the real focus for the next few years to come, because without that common language for sustainability and transition that allows actually all financial market participants to integrate that to their so-called green products, but also to all mainstream products in order to be able to integrate ESG criteria in investment decision-making, but also in risk management, we need a fully fledged EU taxonomy. And so in that view, and I'll be quick, but we think that the EU taxonomy should integrate these criteria that are related to the transition in order for the taxonomy to be actually a market tool aimed at supporting an ambitious energy transition for all sectors of the economy, and via appropriate financial tools that can go from sustainability-linked loans and bonds, but also commitment policies, portfolio diversification, and labeling strategies for financial products and instruments. And so we think it is paramount that the platform work for the year 2021 actually integrate the analysis of all economic activities on climate and environmental criteria. And of course, there are a lot of issues stemming from the use, appropriation, and application of the EU taxonomy by companies. And so that is why we think the work that has begun at the EU level on drafting that delegated act on Article 8 of the regulation is actually crucial. And besides the very legal stuff, we actually think that via this delegated act, we can actually reach rules for companies and tools also to allow them to for sufficient appropriation of the taxonomy and for application in their reporting, of course, but also in their strategy definition, for instance. And so that is why we have been very closely consulting financial community and companies on this topic. And since the adoption of the regulation in 2019, and we will be very vigilant to ensure that the challenges on the use of the taxonomy can actually be resolved through that delegated act. And lastly, I would like to raise the point that all in all, sustainable finance cannot function properly, and the greening of the financial system cannot function properly if we do not have extra financial data on the one hand and the right taxonomy on the other hand. But it's also crucial to ensure legal, but especially operational consistency between the taxonomy and all other texts that are related to sustainable finance. And I'm thinking here of the future European standard for green bonds, the eco-label for financial products, but also any other regulation that might stem from the European Commission Action Plan for Sustainable Finance, so that we do not have a market that is so fragile on sustainable aspects that it's actually so fragmented that at the end of the day it does not work out. So we think this is key for the development and the sound development of sustainable finance. I'll stop here because I know we'll have time to exchange and answer your questions as well. And I see that we've seen replies to the question I asked on the taxonomy, and it seems like most people answered question B, saying that it remains purely in financial information. So we'll probably have some time to talk about that as well. Thank you, and I hope I was not too long, Lekwang.
No, thank you very much, Charlotte. Yes, 26 people answered to your poll question, and 62% said no to the question. So you made your point very clear. In order to sustainable finance to work, you need the two legs. The first leg is data, and the second leg is the taxonomy. And in both cases, companies are key, meaning that if companies cannot assess whether or not they are compliant with the taxonomy, and if they don't disclose data, it won't work. I mean, the Sustainable Finance Action Plan won't work because investors won't have the data to decide where to invest their money. So now my question is that since the role of corporate is key in the implementation of the sustainable finance, how can we ensure that companies are really involved in the definition of all the new requirements? I'm asking the question because we saw that the Sustainable Finance platform was set up last October, and 30% of the members of the platform represent non-financial companies, and we are very happy with that. But the thing now is that the Commission is consulting on its delegated act, defining the criteria for the first two objectives of the taxonomy regulation: climate change adaptation and climate change mitigation. And it seems like the platform will not be consulted. Of course, you have the work of the technical expert group, but I mean, shouldn't the platform be consulted? And how can we be sure that for the other objectives and all the other technical screening criteria, the platform will be consulted and that companies can have a say on the definition of the implementing measures?
I think it's a really good point, because that was indeed one of the criticisms that have been addressed by many stakeholders on the fact that the technical experts group, for instance, had not consulted enough, or that companies were not rightly involved in the process of defining these taxonomy criteria. And so this is why actually one of our main points of discussion during the discussion of the regulation itself was to ensure appropriate governance for all that and appropriate involvement of companies in the definition of the criteria. And so when you look at the regulation, I mean, the taxonomy regulation, it's Article 20, and you see that the platform has to advise the European Commission on every single delegated act that will come forward as per the regulation itself, but also outside the regulation, as long as the taxonomy is concerned. And so there are several meetings of the platform that have been organized since it's been set up in October. There is also, on the other hand, that member states experts group on the taxonomy, and we will have, as soon as I think it will start in early 2021, a very close dialogue with the platform itself, because our role as member states representative is to advise the platform also on the criteria. And so I think that's also another way that companies can be involved, because we ourselves consult very much companies on the way forward. I mean, of course, on the criteria themselves, but also on all of the application issues. And that's why I had been pointing out that work on the delegated act under Article 8 of the regulation. But that's a very sound point. And it's very important that all sectors are represented, and that there is, of course, a very strong ambition also on the criteria themselves, and the fact that the taxonomy has to be both, let's say, that medium-term framework for sustainability, so we know which thresholds and criteria to reach in order to be carbon neutral by 2050, but it also needs to integrate, and much more than now, though it's already been integrated, integrate transition-related issues, like how to get there. And that's how companies also can be accompanied by financial market participants to do so, if there is also that track to get to carbon neutrality. Because especially if we want sustainable finance to sort of like get out of its niche and actually become mainstream, we need these transition pathways to be set up. And that will be part also of the work of the platform. So I think that's another way that companies can actually be involved. And that's why I pointed out the very close link with the other regulations, because, for instance, when you look at the eco-label for financial products, there is one criteria on transition and companies investing in the transition. And we very much like actually that integration of that criteria. And there is one criteria that has been set up on engagement. And that's also how I think that financial market participants have to accompany companies in their transitions. So, sorry, I stepped out a little bit from your question, but just to say that companies can be involved on several aspects. One of them, of course, is the platform, and it's super, and that's why it was one of the main goals of the regulation discussion, but also via other ways that have been set up in other EU projects and or regulations as well.
Okay, thank you, Charlotte. Before we go on, can I remind everyone to go mute if you are not talking, to avoid noises in the background? And I would like to remind all the participants that you can ask questions using the orange, whatever it is, that is at the bottom of your screen on the right. Now I'm turning to Daniele. Daniele, you advise companies in their relations with investors and shareholders. Can we have your views on with taxonomy, sustainable finance, and ESG stuff?
Thank you very much. Good morning, and thank you for inviting me to participate in this panel. To begin with, I have one poll question for the audience. I will read this out and then wait for about 5 seconds to allow you to respond. The question is, which sustainable reporting framework are you most familiar with, if any? A, TCFD, B, SASB, C, GRI, D, IIRC, and E, none of the above. Thank you. When considering the role of corporates within sustainability at Georgeson, our attention shifts a little away from the emerging regulatory disclosure requirements and centers more on how companies engage with their investors on these topics and how sustainability and governance issues affect companies' AGMs. As has been discussed, there has indeed been an explosive increase in the investor focus on ESG and sustainability over the past few years, both in terms of corporate disclosures and in terms of expected operational and strategic adjustments. This is having and is going to have a major impact on how companies engage with their investors and on how investors vote at AGMs. Environmental and social issues in particular have gone mainstream during the 2020 AGM season, and the focus on these promises to increase further in 2021. A number of factors are driving and channeling the shift in the investor community, and we think it is worthwhile for boards and companies to keep these in mind as they approach their investors in the context of the upcoming AGM season. Firstly, from a corporate point of view, it is Important to remember that institutional investors are themselves under significant pressure to integrate ESG in their investment strategy and to exercise active ownership on sustainability themes. This pressure comes from their own clients, the underlying beneficial owners, but also from the media, NGOs, legislators, regulators, and in some cases, their own investors, as investment firms are often listed in their own right. Many institutional investors have joined initiatives such as the PRI, the IIGCC, and Climate Action 100+, which now counts out of the 3 largest global investment managers. However, a number of NGOs like Share Action and Ceres also scrutinize what investors say on ESG and often question whether these commitments are reflected in the investors' public voting records, and the media often amplify these claims. From 2021, increasing pressure will also come from the proxy advisors who assist investors in formulating their AGM vote decisions. In fact, in their guideline updates for 2021, which have come out in the past few weeks, both have introduced new provisions on how they deal with environmental and social issues, and in both cases, as far as Europe is concerned, their approach focuses on recommending against directors as the ultimate remedy. The question of why director elections are the focus of ENS efforts in Europe is worth considering a little more carefully. One element to think about is that there are significant differences between the US and Europe in how ENS topics are addressed at the AGM. In Georgeson's recently published review of the US AGM season, we in the low 3 figures, ENS-related shareholder proposals have become a fixture in the US market, while across Europe, environmental and social shareholder proposals can be counted on the fingers of your hands. An additional difference, which has also been noted elsewhere by Share Action, for example, is that while ENS proposals in the US and elsewhere have focused mostly on disclosure issues, the few shareholder proposals that have been filed in Europe call for specific action. Notable examples include the Share Action proposal at Barclays, campaigns at Shell, BP, and Equinor, and the TCI campaign at AENA. The limited number of ENS-specific shareholder proposals in Europe, combined with the intense pressure on investors to show publicly increased stewardship activity on ENS, are one likely reason why the investor focus seems to be settling on director elections. There are some nuances. For example, the IIGCC has recently suggested a vote against the Audit Committee chair, as well as a vote against the external auditor reappointment as the while the leading proxy advisors and others seem to take a somewhat different tack on director elections in the context of sustainability. However, there is no question that directors across Europe need to be much better prepared for how ENS disclosures and commitments will increasingly affect their own re-elections going forward. One alternative that could become of increasing interest to corporates is the possibility of companies themselves putting forward specific ENS-related proposals. As you may be aware, since 2018, Spanish companies have been required to votes on their non-financial reporting. In addition, in a notable recent case, TCI Fund Management convinced Spanish airport operator AENA to adopt an annual advisory vote on its climate plan. This is part of a wider campaign on TCI's part and may result in further such moves in the future. The volume of ENS updates from a variety of sources and stakeholders has increased dramatically and poses a challenge to companies and boards as to where to concentrate resources. In our mandates, we typically encourage our clients on their own investor base, who will ultimately determine the success of their AGM, and to engage with them openly and constructively. In this regard, we tend to focus with our clients on the following 6 areas. Number 1, identification and insight. In order to achieve an effective engagement strategy, it is important to identify on an ongoing basis which investors are most important to your company, to gather information about their ENS and governance policies, votes, data sources, and preferred ENS frameworks, and about who is involved making process. Most of these will not be the same people you meet during an investor relations roadshow. Number 2, timing. Most ESG teams at institutional investors are subject to significant resource constraints, despite the increase in staffing that has been reported in recent months. This is particularly the case during the AGM season, which in Europe typically runs from March to July. The autumn and winter are often seen as good times to undertake more in-depth engagement. This is also the case because investors are increasingly keen to be involved before the decisions that will ultimately feed into the annual report are set in stone. Number 3, personalities. It is important to think about who will be leading and participating in the ESG engagements. On the corporate side, the relevant people will need to be able to show that ESG issues are dealt with at the appropriate level of seniority, increasingly including direct board involvement, while at the same time showing the technical understanding necessary to make the company's case effectively. On the investor side, it is important to understand who is involved and what they are seeking to get out of the engagement. Number 4, be proactive. During ESG engagements, it is important to have a clear agenda and for the company to be prepared to present, as opposed to simply making themselves available. While it is important to allow the investor to ask questions, you should not assume that they will necessarily have any or be fully informed on company developments. Governance and ESG analysts are often not specialists in your sector and do not necessarily follow the same set of companies year after year. Evidence that engaging constructively with your investors will increase trust and make it less likely that they will vote against you in the future. Number 5, ask questions sensitively. It is certainly a good idea to ask about the investor's ESG priorities and voting decision-making process, whether they subscribe to one or more ESG rating agencies or proxy advisory services, and how they consider the data and recommendations of such advisors. However, it is important to remember that this is a sensitive topic, and it is essential to avoid implying that investors blindly vote advisor or are over-reliant on ESG ratings, even if this is sometimes accurate. Finally, number 6, transparency. Presenting a full picture makes it more likely that the feedback you obtain fully reflects the investor's views, and therefore their likely voting decisions. If you leave key details out of your presentation, you need to be aware that when these details do come to light at a later stage, this could significantly alter the way an investor views your decisions and proposals. In conclusion, while the emerging regulatory initiatives are of primary importance, it is also essential for companies not to lose track of the investor expectations and interactions. Thank you for listening, and I look forward to any follow-up questions or audience questions.
Thank you, Daniele. We have the result of your poll question here. 28 people voted, and the winner is A, TCFD with 39%. Then comes
Excellent.
C, 29%. C is GRI. I believe, yes. And then E, what is E? E is none of the above. All right.
Very interesting. Thank you.
Thank you, Daniele. I will come back with a question for you, but time is running out, so I will turn immediately to Fulvio. Fulvio, can you share with us your experience? How do Italian companies cope with all these requirements and demands from investors and stakeholders on ESG matters?
Okay, thank you, Lequang, and thank you to European Issuers for inviting me. Let me start with my poll question. Which of the following should be the first priority for corporates and institutions to drive an effective use of non-financial reports by investors? And the answers are A, disclosure of a larger set of data. B, explain the clear link between business model and sustainability. C, standardization, comparability of KPIs. D, integrated reporting. And E, non-financial reporting shifting into the CFO's realm. A few seconds, please. Okay, let's go to the question about the Italian situation. The number of companies that must publish non-financial information according to the directive is likely more than 200. 150 listed companies and 50 banking or insurance companies not listed. The most important point is that when these companies were asked for the first year to report under the directive, 40% of them already had an experience in publishing non-financial data. So around 80 companies already published non-financial data, whereas the under 60%, which means around 120, were at their first experience. So the first remark is that the number is quite small, and this is reflecting the industrial structure in Italy, which is typically lacking large companies. But also it shows the effect of the directive, because the effect was more than doubling the number of the organization asked to report non-financial data. As for the standards that these companies rely on, they all chose GRI. And GRI, initially G4, mostly GRI standards, they report 73% under the core option, and only 3% obviously under the more comprehensive level. And interestingly, 24% only make a reference to the GRI. So they don't have a complete set of data, not even for the material issues. And there is still a 30% of companies that show at least one omission. I mean, something that they should have published, and they don't, and they explain why in the GRI content index. So this gives you the idea that inside this group of 200 companies, this group is not homogeneous. There is a part, there's a group of a few large companies, I think no more than 30, 40, that not only had already experience in publishing and producing non-financial data, but are very well acquainted also with other requirements like the task force, climate-related financial disclosure, to the CDP questionnaire on CO2 emission, and even to the taxonomy. Whereas the 120 around or more, because I say that the leading group is smaller, so the majority still struggle with compliance and maybe don't have a clear idea of all the other standards and requirements that we mentioned. At the same time, we saw some progress. If you compare the situation at the beginning, when in the first year of mandatory reporting, and now we can see, for example, that the omissions that I already recalled that are now 30% around, they were 40% 3 years ago. And that the percentage of companies reporting an integration of ESG risks rose from 54% to 68%. And that the companies saying they have a plan on sustainability rose from a very small number, 15% in 2017, to 38%. So still a small group, but there is a growth in it. And also there is some sign of the recognition of potential positive effect of non-financial reporting, because a company under the Italian norms can also choose to report under these norms, even if they are not obliged by size. And at the beginning of the story, there were only 5 choosing this option, where now they are 13. So small figures, but this progress confirms that the non-financial reporting could be a good first step in the awareness of the importance of sustainability for business. In this respect, I think that the extension of the number of companies obliged to report under the directive, under the revision of the directive, is probably a desirable evolution, even if taking into account the fact that there is such a large part of companies still at the beginning of their experience, we should probably proportionate our requirements to the new reporters. A last point I will touch is about the type of publication that these Italian companies chose. And it is interesting to note that 80% of them publish the non-financial information in a separate document. Why? Part of the answer is that the companies that already published a sustainability report before the directive, they still do it, they went on that way. But it's also true that the newcomers found it easier to produce a separate report instead of putting this information together with the financial one. And this may be the result of a lack of managerial culture that lacks, some fundamentals of sustainability. So it's difficult inside the company to find an agreement about how to put this information together. And the final point is that the document where non-financial information are gathered are very often also communication tools, and they are not thought only as targeted to investors, but targeted more generally to stakeholders. So this is an important point to explain the situation. And I would recall that this separation is not, should not be a problem for investors, because the Italian norms say that even if these documents are separate, they must be published at the same time. And also, always the Italian norms provides for a mandatory external assurance. So these two worries that were behind investors' concerns in the public consultation for the revision of the non-financial directive are in some way already answered in the Italian situation. I will stop here. If you have questions, I will be glad.
Okay, thank you, Fulvio. We have the answer to your poll question. 26 people voted, we lost 2. And 46% said that the priority for an effective use of non-financial reporting is B. B, I believe, is the link between the business model and sustainability. And then comes answer C, 42%. C is better comparability and standardization of data, if I'm correct. Thank you very much, Fulvio. I will come back to you with a question later, but now I would like to turn to Joël. Joël, can we have your views on the role of corporate in sustainable finance?
Of course. Well, first of all, thank you for inviting me here today. I'll start with the poll questions. So question 1 is basically, on average, on an annual basis, how many surveys do you receive from investors or rating agencies regarding your ESG data? Answer A is 1 or less. Answer B is 2 to 3. Answer C is 4 to 6. Answer D is 6 to 10. And answer E is more than 10. So I'll leave 5 seconds for you to respond. Then the second question is, on average, on an annual basis, how many resources do you allocate to respond to those surveys? Answer A is half an FTE per year, a full-time equivalent. Answer B is 1 full-time equivalent per year. Answer C is 1.5. Answer D is 2 FTEs. And answer E is more than 2 FTEs. Again, I'll give you 5 seconds to answer the question. All right. So talk about the role of corporate in sustainable finance. I think maybe just to start with, because from the previous poll questions, it seems quite clear that we have quite a heterogeneous audience with people more or less familiar with different levels of awareness regarding the topics we're discussing. So the first point I'm going to make is really to state that from March 2018, when the Commission published the Sustainable Finance Action Plan, the direction has been very clear. And even though we had seen the acceleration of interest for ESG and the awareness rising among the financial ecosystem by and large, that was really the one of the key point of inflection in the direction of trying to influence the allocation of capital. So this is really what it comes down to from our perspective, is the allocation of capital to be allocated towards the right project and the right assets. And in this area, what we think is really the core location or place for issuers is twofold. On the one hand, there is transparency, and on the other hand, there is transformation. So transparency essentially comes down to companies trying to maximize the level of disclosure, and this is what is really expected and does resonate with what was said earlier as the first pillar or one of the legs on which sustainable finance need to be able to run and function normally. So the key thing is going to be transparency, and transparency for issuers is really coming down to reporting. So how do we see this? We do believe that reporting is today providing a premium to companies that are accepting to bear these costs. And we understand that in the context of today, that there's an overlapping set of regulations, some of them existing, some of them still in building, that appear to be very complex from the issuer perspective, from the conversations that we're having with you in general. And what we have realized is that companies that do bear that cost and move ahead towards more transparency do get a premium, because companies disclosing full details on the performance, especially extra financial performance, do attract more investors, or at least are included in a wider number of whether indices or panels, rankings, and awards. And this is very important. On this end, we want to stress the fact that companies listed on markets in general do not necessarily have to abide with the plethoric number of frameworks, and we've mentioned earlier, for instance, the existence of the GRIs and TCFDs and SASBs and IARCs and NELS, and there are many of them. And we often get the question, and it's important to remind issuers that every company, of course, depending on the size of the nature of the business, on the geographical culture of the company, should pick what matters the most, depending on of course, what appeals to their investor target. They should select what matters the most and not try to basically abide with every single framework. So picking a framework that is relevant for the business, that is relevant for the company, its maturity, and most importantly, its ambition, is the key thing to maximize transparency ahead of the upcoming changes in regulation, because NFRD is here already and companies are complying with NFRD. Ahead of the taxonomy, ahead of any revision, being selective is important to be super efficient in transparency and to be good at your reporting, to ensure that investors do get the right message. So this is the first role that corporates should have. And the second one, which of course is much more forward-looking, is transformation. I think it was mentioned earlier by most of the panelists. Today, the piece that is not the missing piece, so to say, but is connecting the company today to sustainable goals as a whole, not just reporting, not just transparency, not just criteria or KPIs, but really projecting the company. Of course, there is, for example, a trend around the temperature trajectory. Companies, again, should really focus on what matters to their business, what makes sense for them, what resonates with the nature of the sector they're operating in. And the taxonomy does help in this direction by categorizing all these business activities. It helps identifying what is material and what is not for a given company, and focusing on those and looking at how to transform those businesses is what matters. And the way we look at this from the Euronext perspective is, how can we help these companies? How can we push them moving forward? And of course, it's twofold. On the one hand, on the transparency side of things, there are different categories of companies, some of them very much advanced, some of them not so advanced. And beyond the ESG reporting guidelines that we did publish in January earlier this year, we intend to help these companies, and for those that need, of course, the support of the exchange, we are planning to set up a number of initiatives to support them in understanding regulation, understanding investors' expectations, and facilitating this transparency effort. So for one of the things, for instance, that we are envisaging is the creation of a digital school that would be open to all companies that are welcome to take the next steps towards transparency. So this is one example. And on the other hand, for transformation, what is going to be super key really is capital. So a company, for it to transform and develop and get to the next step, will need capital. So we have launched a number of things in this area, including the green bond segment, where we have more than 200 billion euros raised so far. What is important, of course, is accompanying companies. We've set up an ESG advisory service to help these companies moving forward. We set up on the supply of capital side of things a number of indices and ETFs to attract additional funds that are going to be directed as new capital to these companies to finance themselves. But beyond the debt financing, what we think is really important, and the ECB does insist on this, is to say it would be difficult to have a sustainable transition if it's entirely or massively financed by debt. So equity capital is going to be key, and this is one of the areas where we intend to focus as well. So I'm conscious of the time, so I'm going to try not to be too long and focused on the questions.
All right, thank you, Joel. We have the result of your poll questions. Would you like to read them, or do you want me to read them? Poll 1. Okay, we have 16 voters.
Poll 1, effectively, yeah.
Yeah. So 25% said C. C, let me check. C is 4 to 6 surveys.
Yes. 4 to 6 surveys. And
Then
E 25% is more than 10.
Yes, 44% said E, so more than 10 surveys every year.
So yeah, if basically if we combine and we look at C, D, and E, we see that most companies get between 4 and more than 10, and close to 95 companies.
Okay, and then the second poll question that you asked, we have 25%. It's A, so it's half a full-time employee per year, and then we have 25% for C. C is 1.5 full-time employee.
And
okay.
25% as well for E, which is more than 2.
Okay, so just building on the result of the poll questions that Joel asked, I would like to ask a question to Fulvio. Do you know if Italian companies answer to all the questionnaires that they received every year from non-financial rating agencies and investors, or are there some company who can decide not to answer to some of the questionnaires just because they don't have the time or they're not interested?
Well, I think that the situation again sees two different groups. Some companies deal very frequently with questionnaires and respond to all of them. But I think the point is that these companies understood that there is a value in responding. One point is that these questionnaires in some way allow you to have a full audit of your ESG performances, ESG policies to identify gaps and improvements. And the second most important is that the evaluations from rating agencies, sustainability rating agencies, help reach investors and convince them that there is a good option in that company. The fact that the number of big companies in Italy is quite small explains, I think, why most of the other companies are not that used to answer these questionnaires, because sometimes they are not even asked because they are not big enough. And when they are, if they don't see a precise benefit in answering, they don't. So this is the situation.
Thank you, Fulvio. We have two questions from participants, so I will read the first one. The first one is, we are getting ESG data requests, not only from investors, but also customers with many different frameworks. How is this going to get standardized so we can maximize efficiency? Ooh, a very tricky question. Who wants to address the question?
Maybe just a quick contribution. Effectively, we understand that there is a growing realm of questionnaires being sent to companies from every angle, including science and else. As of today, the only horizon that we have for standardization really we first of all need to have a common language, and luckily enough, we have the taxonomy here. Once we will have a common language, we will be able to, from that common language, derive what we need to get and what we need to publish and how we read that information. So as of today, unfortunately, the immediate news is we don't have an immediate horizon for companies that are getting all of these questionnaires. The only short-term solution that we are envisaging from the Euronext side of things is there a way for us collectively, not just Euronext, but as an ecosystem, to get around the table and agree on what we consider to be minimum viables? So agree on the common denominator for given industry or for the ecosystem as a whole. To say, once I've published that common denominator, I make it public to all of my stakeholders in a centralized manner, which of course resonate with the ESG database initiative at the EU level. So the answer, to make a long story short, is as of today there isn't such a solution. We effectively are having these discussions around, could we build such a common denominator that would be publicly available to the stakeholders of a given company? We're looking into this, and on the medium to longer term, the horizon is, luckily, we will have the taxonomy, so we can speak the same language, and there is going to be a database so that companies do not have to be bothered from every angle, but really can just produce data very consciously of quality and store it somewhere where every other stakeholders can access it.
Okay, thank you, Joel. My guess is that companies will have to deal with different frameworks for quite a while before we can agree on something that is really harmonized, both at EU and international level. I don't know if Charlotte, Daniele, or Fulvio, you want to comment on that first question?
Yeah, maybe really quickly, just to say that it's of course an imperative, and we hope that the work that is led today by the EFRAG task force will ensure that a standard setter is set up very soon in the EU. I think that, as Joel said, the common denominator is actually a key point. I think we cannot contemplate any comparability if we don't have at least a common denominator of data between companies and on a trans-sectoral basis, though of course there are sectoral issues that need to be addressed in their own, but I think that's a very key point, and probably also the fact that it's good to standardize data, but if you cannot access it, and if customers themselves, without being necessarily experts of the ecological transition, cannot understand it, it's worthless. So that's why I pointed out the fact that an ESG open source, open access database is essential, but also the way that data is actually published on companies' websites and is very important. So all the digitization of all that is really important. And we can see now that actually a lot of companies are benefiting or not. I mean, it depends on the fact that a lot of apps are coming up, for instance, to evaluate products, and that could be the case. I mean, that is the case also increasingly for savings, and to assess the way that your savings are actually aligned on the ecological transition or not. So I believe that companies also have to, take that step forward, and that has to be thought in very close relationship with what is going to be done on the standardization of data itself. Just to be quick.
I was just going to say, Lekwang, that I agree with your assessment that different frameworks are likely to continue for a while. But at the same time, there are efforts as well with mergers and sort of finding common ground. So we are optimistic that there will be improvements.
All right, thank you, Daniele. We have 6 minutes left, so there is another question here from participant. How to encourage issuers from the EU to start presenting their statements using integrated reporting framework? On the integrated reporting, addressing simultaneously financial and non-financial data, and presenting interconnections between them is highly informative and presents a true picture of a company for investors and stakeholders. I don't know if you have any views on that. Yes?
As I suppose it's a journey for us together. It's a journey. It isn't reasonable to expect that every company, as of today, will start a integrated vision of how they look at their businesses. So we see a lot of companies being in this position already today, but before we get there collectively with all of the thousands of issuers that we have in Europe, at least the 1,500,000 issuers on Euronext, it's a progressive journey. Transparency is the first thing. So being able to disclose data, being able to disclose understandable data, and being able to disclose eventually comparable data is the first step. A second step is, of course, the transformation I was referring to, is once a company starts looking at how their business will be projected into the future, and then and define objectives, define a strategy, they can build this integrated understanding of their business, and only then are they able to communicate on it. So it's a journey, and of course there are different companies at different stages of maturity in this process. So some of them very, very advanced, some of them not so advanced, but the most important thing is the direction is to be embarking on a journey towards integrating.
Mm-hmm. Yes, I agree with you, Joel. It's a journey. It's a long journey. It's picking up in France, but we still have a long way to go. And most companies who publish integrated reports in France are not complying with the IIRC framework. And we think that there are many issues with the IIRC framework. Fulvio, how about Italian companies? Is the integrated report popular in Italy?
No, not that much. I mean, there's a lot of discussion about using the IRC framework, and I think that if we refer to the small group of 30, 40 companies more advanced, I think that most of them will agree with the idea that the integrated report is a good way to convey the materiality of sustainability. But at the same time, I will recall you the figures that I already mentioned about the fact that the companies that already published a sustainability report before the directive, they continue to do it also after. So there might be something in the functioning of a company that even if you talk with some people inside, maybe investor relation, maybe the sustainability department, and you find a perfect awareness of everything, but still they don't go to an integrated report. So there might be something inside of the managerial culture that is a constraint in going to that direction. So the number of listed companies that rely on an integrated report in Italy, according to the IRC, or almost according, is, I think, 5. So very small. The number of so-called integrated reporting is a little bit larger, but still lacking, in my view, of the essential point that I saw in the question to respond. The answers to my question is quite a high percentage of people thinking that the right thing to do is to find the link between business model and sustainability. So I think that integrated reporting is one way, maybe it's not the only one.
All right, thank you, Fulvio. We have 1 minute left, so I have 2 questions. One very quickly to Daniele. Daniele, do you think that investors are really interested in ESG topics, or is it more about policy dividends?
I think you see both. So investors clearly have an agenda in terms of positioning themselves, but they are also obviously interested in long-term sustainable returns. So we see both of that.
Okay, thank you. I have just received another question, so very quickly, we have 1 minute left. How investment in companies outside the EU will be treated? Automatically a non-compliant, or how their ESG compliance will be verified? I don't know if you have any views, or if Charlotte,
Maybe
I don't know if you can.
Yeah, I mean, I can maybe say on my end that, and also, I mean, I remind I'm talking on behalf of like the regulatory side, but I think the work of the International Platform on Sustainable Finance is going to be key there, because I mean, for instance, applying the taxonomy to non-EU companies is obviously a challenge, given that data is not that available on that, and given that most criteria actually apply in relation with European regulations. So I think there is a need to ensure that there is a common understanding of the transition at international level, with probably internationally relevant technical screening criteria, for instance, that would be able to assess companies the right way when they're located outside the EU. And I think that also, of course, standardization of data at the international level is very important. And so that, I mean, having a common denominator of data at international level would be probably the best way forward as well. But then it becomes a political issue, of course, because that would mean that the EU, China, America, and all that would have to agree upon the same indicators. So that's a challenge, of course. So I'm not really replying to the question, I mean, giving solutions, but trying at least to drive some ways forward.
But I suppose I definitely agree with what Charlotte is saying. I suppose it is likely that a European investor will be expected to have the same level of transparency, whether investing in Europe or outside of Europe. But again, these are just ways of looking at things.
Okay, thank you. Well, it's 1 minute past 12, so we need to close this session. So first of all, I would like to thank all the panelists, Charlotte, Joël, Daniele, and Fulvio. Thank you to European Issuers and Euronext for bringing us to this webinar, and thanks to all the participants.